Hey Shane, how's it going?
It's going, buddy. How are you today?
Doing well. Uh, Bit of a sell-off on our hands, so this should be fun. We'll keep it short here. We've got Christmas coming up and a light trading volume this week, but we're seeing some fireworks here, so we'll get into it. So,
Short as we can, anyway. I know we're both a little long-winded when we get to talking about charts and economics and all that fun stuff.
yep. So, and welcome anyone. It's your first time or your repeat visitor. Be sure to like, subscribe, sign up, give us comments or anything you'd like us to address. But
Yeah, there's a bunch of you guys watching. I'm surprised we don't get more questions. So, fire some questions our way. Gives us something to talk about next time.
yeah, so all right. Well, today's December 22nd. Like I said, lighter trading volume, but we can see some moves on that. So today we had some fireworks and we'll talk about that, but some economic data and more to come tomorrow. But, Shane, let's start with this one that came out. So I'll let you kind of talk about it.
What are we talking about? Sorry, I'm just watching the market melt down over here. Holy smokes, man. Wow, it's ugly today. We're gonna get to some charts that were, I think we screenshot them maybe like 10 or 15 minutes ago, but it's already gotten much, much worse.
Yeah.
That's pretty, like what, in the last 15 minutes, the market's down 0.5% on
Yeah. And
top of,
I
ooh,
think I told
gosh,
you
it's
right
ugly.
before we started, seeing if you wanted to bet on it, but I think we're going to break 3,800 on ES before we even finish this recording. So,
Could maybe before we get to the next slide. Jeez, ugly out there. And this, what you see on your screen is why the market's down today, or at least that's the narrative that Mr. Market is giving you for today. The top chart, which is explained on the right-hand side text there, is that jobs came in. I guess this is jobless claims. So initial claims for unemployment were still not uh, is that right? Is it jobless claims? Is that what we're looking at? I think it's got to be. Still not that
mhm.
high. The for unemployment to tick higher, this number would have to be much higher than the 216,000 that we're seeing. Um, so not enough people are losing their jobs basically, which is a green light for the Federal Reserve to continue hiking interest rates, and so the market is selling off on those initial jobless claims. So that's the number of Americans filing new claims for unemployment benefits. That's what that is.
Yeah.
Um, did you have
And
something to say?
I was just going to say, normally this would be good, but
Yeah,
with the
yeah,
backdrop of the Fed trying to get demand to take a break, this is not helping. What they want to see is, layoffs happening, slowing growth. They want to see the, impacts of their rate hikes. And the longer this goes on where they're not seeing it really come through the data, you're really going to see the, market sell off, I think, because they're not going to let off. They'll keep raising or they'll keep them high, either of which are not good.
yeah. And last night, Micron Technology came out and said they were going to lay off 10% of their workforce. So they've got 48,000 employees. That means about 4,800 people at Micron are going to lose their jobs. And other chip makers are selling off on that news as well. So we'll see. I think a big wave of unemployment is coming, but we're not quite there yet. And then on the left side, text explains the bottom chart, which is GDP for the quarter. So we got our final estimate or our final report of GDP. So they do three different releases of GDP. They do an initial estimate, a second revision, and then a third and final number. So the final number for GDP for last quarter was 3.2%. Um, but I think that was heavily impacted by net exports, which I think is unlikely to persist. So it's kind of a phantom number, but at the same time, well, I think it's a phantom number. It's the reported number, um, but I don't think it's likely to persist. At any rate, the Fed sees the 3.2% GDP, and again, they get permission to hike rates. So these two charts combined are just there's nothing to cause the Fed to slow down further their rate hike cycle or pause their rate hikes, let alone pivot to cutting rates. So this is the market saying, "Uh-oh, they're going to keep hiking." Um, and the Fed doesn't finish its next meeting until February 1st. So we got a whole month of January to go with a bunch of data. Um, Companies are mostly blacked out from buying back their stock right now because they're about to start the next earnings season. So there's just a lot of bad stuff going on. And Santa Claus and his rally don't appear to be right around the corner. So could get
No,
ugly before the end of the year, could get ugly in January. I increasingly think that the market's going to be down again next year as we probably head into a recession. No guarantee. I don't know what the market's going to do next year, but I don't think there's enough. Everybody thinks that the market's going to just bounce back next year because you can't have 2 years in a row of the market being down. But we've talked about it on this call. You certainly can have 2 years in a row of the market being down, and a lot of times goes down. If there's consecutive down years, um, most recently the second year was down even more than the first year that the market was down. And then the third year was down even more than the second year was down. So it can happen. It has happened. And no reason it can't happen again.
right. And I agree, before this call, you and I were talking about it and look at charts, but I think this year you had a pretty solid consolidation on the S&P 500 and nothing alarming. And I think those bells need to go off, and that happens when it consolidates like that in a downtrend and then really breaks. So we'll see. But I wanted to talk about one thing just real quick. This GDP number, it's always important to remember it does not move linearly. So, by definition, this was the recession. We can have a little recovery and then the real recession. So don't be fooled by positive numbers coming in and think it's all good now, time to get in, because the market's telling a little different story. So, and Shane, we talked about this last time, but just some back and forth that went on in the last press conference with Powell, but like
Not even
it's
really back and forth. The point of this slide is just they're not looking at cutting rates, so don't forget it. Today's data encourages them to continue hiking, and so they're looking to get inflation down to 2%. They're a long way from their goal, and the financial media keeps asking them when they're going to cut, and it's just like, I mean, I think if Powell could have thrown something at this guy, I think he would have thrown something at him. Like, are you guys not listening? We're not cutting rates. Get out of my face. That's pretty much what he ought to have said. So
yeah,
yeah, don't look for the Fed to cut rates. Don't fall for the next pivot narrative that comes around. It's not happening. Not anytime soon.
no. And the best thing to look at is you can go through this, great for the fundamental context, but when you look at this chart, we've been talking about this whole way, but this picture perfect rejection on this line all the way through. And here we were at the last CPI print and the Fed meeting. We've sold off. We had a bounce, which is natural. It's unnatural to get just a series of red days all in a row, kind of like we had here. Those will give you a bit of a snapback. So, this could be that last little kind of saving grace right there. And then I could see this going down here really quick,
Yeah,
especially in a light.
rallied right up into the 50-day and rejects there and goes lower. No surprise to me. And that double top highlighted at 4,100 is just nasty. I mean, that's just a slap right in the face. Everybody got sucked in, said, "Oh, we're gonna break out. We're gonna break out. We're gonna break out. We're doing it twice." And then nope. See ya. So all the longs. I mean, imagine buying at 4,100 here. We're above the 200-day moving average. We broke out. Market's going higher. Bear market's over. We're gonna get the Santa Claus rally. Nope. Nope. Not at all.
Yeah.
So just ugly. I mean, it's beautiful if you're a short seller. Looks lovely for the shorts.
If
But
you're a if you're a trader, this is great. Also, Shane, you and I were talking about something I did personally was, I got pretty aggressive down here, but when we came into that level, I started de-risking quite a bit because, hey, maybe it'll go higher and that's great. And I can always get back in. But when you're up in this level and you've got a rejection level that's rejected, what, 3 times, you have to de-risk. It's not
yeah,
really a great time to be jumping in.
right.
So, next, the Qs. This is just even worse, Shane. I'll let you talk to this one, but gosh, this is an ugly looking chart.
Wow, how'd the Qs get ahead of the SPY? Maybe I got the same chart in there twice on accident. But yeah, I nothing really to add. I mean, it looks the same. Rates going up, Qs going down. No surprise there. I think if we could draw a line that I hadn't drawn yet from that recent low at 254 and to the next, higher low, it would have broken down today. So that's just more downside coming, man. Looks pretty gnarly. You got to figure it drops to at least 260, 254. And if not there, we've been talking about the pre-COVID high at 237 like all year long. And
Hmm.
so that is still in play. We're in a down market. I mean, I don't know. This thing is just lower high, lower high, lower high, below the 200 day, back below the 50 day. There's nothing to get excited on the long side here. Just
No.
you don't want to pick bottoms. It's not a good way to make money.
Yeah, and this is one where I could see a bounce rate here, but I would be just floored, I guess, totally shocked if this is the bottom. I think it'll bounce, and then I think those pre-COVID highs, that's just a natural magnet. I would expect price to get there, in pretty quick order, but yeah, that's a
I
natural
mean, when
level
you
there where you
say
get.
bounce, are you talking about the bounces that we see in like those down channels, for example? They bounce,
Yeah,
but like they're still going down. I mean, they're
yep.
not.
I'm glad you asked. So something as it moves down, if we're talking the daily candles, we have daily chart up, it gets here, you could have a day, right, of a green candle, and then it's going to break down through there. So
Yeah.
yeah, we're not talking about something where, oh, next month we're green. This is just, it's going to kind of probably do something like this, stair step. Maybe it hangs for a minute and then should find its way down here.
Man, I hope so. I really hope so. But I don't get me wrong. I don't like seeing people lose money. That's unfortunately it's hard to make money in an environment like this unless you're able to short stocks, which not everybody really wants to do. And if all you got is IRA money, it's really impossible to do. You can buy puts, but that's even harder. So it's just really hard to make money on the short side. I think the right thing to do is hold a lot of cash. Not 100% cash. I mean, so you're gonna lose some money on your longs probably, but having a big cash buffer is good. Earning 4% on some of that cash via treasuries is a good idea. The goal is to, hold on to high quality stocks that are not going to stop you out. They're going to be around for the long run. And yeah, they're going to go down in the short term, but you'll hold them through, and then you'll have plenty of cash to either add to those positions or pick up new ones on the way out of it. And I don't want to sound like I'm celebrating people losing money because that's not the point. If
Hmm.
anything, I'm excited that we've called it right and we continue to call it right. And so that doesn't necessarily mean that, I'm 100% max short the market or I'm doing that for my clients. But I'm competitive and so I like to be right. So
Yeah.
that's why I'm excited about it because it's pretty
And,
obvious.
and it's always important to emphasize what this is doing right now is building to present a wonderful buying opportunity. This doesn't mean the stock market's over. It's selling off, and if you play some good defense, there's going to be a wonderful opportunity to get in at some really attractive valuations. And when we get there, it's going to be great. Right now, we're still kind of working our way there, though.
Yeah, how much is the Nasdaq down now for the year or QQQ? Let's see. I'm just gonna look real fast. Year to date, Qs is now down 33%. So I mean, if you got say 50% of your money in the stock market and you're only down say 10% for the year, so you got half your money in, but you've picked good stocks that haven't gone down as much as the market, and you're only down 10% for the year, and you have 50% cash available to take advantage of the sell-off. I mean, that's a good position to be in. I think you have to be pretty happy about that if you're kind of like a long only investor. You should
Hmm.
be selling covered calls and being down 10% with 50% of your portfolio in cash. Meanwhile, the Nasdaq is down over 30% and crashing. I mean, I, it's hard to get happy about losing money. Like it's like the saying where they say it's like kissing your sister or something. Um, so it's hard to get real excited about it, but you have to call that a win.
Hmm. Yeah, and something I was just talking with a client about is it's like playing football. It's okay to get banged up a little bit, a couple bruises, scratches, but you don't want to lose an arm and a leg because
And you
then,
don't score a touchdown on every
yeah,
play either.
no, you just sometimes you want to just hold the line, make sure you save some energy, and when the
You
time
want
is
to
right, you strike.
punt and stick them down below or inside their 20-yard line. Like that's a win, right?
Yeah,
You didn't put any points on the board, but you played good defense and you put the other team in a bad spot. So that's kind of yeah, that's a good. I mean, I hate sports analogies, but yeah, it works.
yeah.
Anyway, next.
Next, so just
Yeah, I
same
got
chart
Qs
really.
twice on accident. So SPY doesn't look much better than this. it's pretty ugly and getting uglier by the minute. Gosh, we haven't seen a green tick since we got on this call, so we're down at 38.06 now. Ugly, man. Yeah,
Hmm.
SPY doesn't look good either.
No.
Next.
And yep. So here's Apple. And, I wasn't really looking at this, Shane, but now you got it up here. I'm looking at this. This is one of my favorite trades. So when you have a kind of support line like this coming up, you break through it, come up, retest, and start rolling. That's usually what I like to see, where you get a great entry for an explosive move down here. I just pulled this chart up, so I hadn't looked at it until today, but that's what I'm seeing the first 2 seconds. But
Some
Shane,
good
what do you
looking
got?
shorts. Nah, just some good looking shorts in there. I mean, we haven't stopped out of Apple yet. We we might today. I think a close below 129 means you got to take some profits on this thing if you've been in it for the long run, because there's really not a lot of support below that. There's a gap down there that I've highlighted in that yellow and black box, which takes you down below 100 in Apple, which is, another 30% down. And I'm here to tell you the Apple is not immune from that. I mean, if you can buy Apple at $100 a share in the next 6 months, remember where you heard about that first.
Yeah.
Because you should buy it down there if you can. I mean, I don't think Apple's business is going to change so materially that it doesn't represent a good value down there. Wow. All right, I'm
Looks
gonna
like
mute for a second.
all good. Looks like we both have our coworkers in the office today, but mine's sleeping, so we're good.
Unreal, man. Unreal.
So, but yeah, Apple, gets down near 100. I really like that long, so we'll see when we get there, or when or if we get there. But kind of what I'm seeing, and then man, this is was the darling of COVID and after, and Tesla to the moon. That's all I can think of. Might be the ugliest chart I've ever seen right now.
Dude, it's horrible. It's absolutely horrible. And crashing today, it's down like 10% right now. Oh, it finally got a little green tick. Um, but yeah, that's bad. I think Musk is probably on the tape again, liquidating shares to cover for his Twitter losses. And yeah, it's just brutal. I would not want to be long this stock. How many people do you know that just said, "Oh, it'll come back," when it was down 10, 15, 20%? And now Tesla's down 60 some percent from its highs. Is
Hmm.
that right? I think it is. I think it's, yeah, 68.96% it's down from its highs right now. What do you got to get back to even on something that's down 66%? Like, I don't know, 120, 130, 140%?
No, I think it might be 150, maybe higher.
Oh,
Um,
geez, yeah, you're right. It's way higher. It's like 200%.
yeah, I mean that's
Holy
risk
smokes.
management. Tesla was great here. Wasn't even that concerned with what the story was, but this chart was so good. You saw this distribution, it breaks here, and then Shane, you and I were talking about it. Is I don't always like to short into weakness where it gets oversold, and you're like, well, that's how things break, and this is a prime example. Look at this, all the way down through here, you dropped from 180 to 126, and there was one green candle. I mean, that's where risk management counts. When you break a level, just get out because
Yeah, you
there's
could have,
no
I
telling
mean,
how low it's going.
you could have sold this thing at 200, sold it short at 200. Everybody thought buying at 200 was the move, but it's down 37.5% from there. I mean, in like a couple weeks, man.
Yeah.
Um, it's just, I don't know. This company deserves to be even lower than it is. So I don't know how low it will go. But
And
yeah, it can go lower. It can always go lower. And like I was telling you, man, yeah, markets don't always crash when they get oversold. Sometimes when things are oversold, it's a good buying opportunity. But every time a stock crashes, it's oversold first and then it crashes.
yeah.
So it's crashing from oversold levels. No surprise.
And that's when you could say, oh, well, is it because of the Twitter deal and Elon's involved with that? You know, what this is it got way ahead of itself. And now you've got a rising rate environment and they're a car company.
Yeah,
You know,
Twitter's
I
the excuse, not the reason. It's the excuse.
yeah, Peloton was another one, right? The innovative bicycle that sits in your house with a TV.
Hmm.
And we saw what happened there. So,
The
we'll move.
iPad duct taped to the exercise bike. Love it.
Yeah, we'll, we'll move on there. But So oil just still kind of holding that downtrend right here. This, if we close that candle here, I think this kind of sets us up to move lower. And I think that moves along with this idea that if things are going to get ugly and we're truly in a recession, oil demand is going to start going down. So what are your thoughts?
Yeah, I don't really have much other than just a quick technical look at it. I mean, it's holding that most recent uptrend, but those things haven't held in a while. So yeah, I would expect it to drop lower. I don't know if it'll crash. Depends on, I think it depends on a lot of things like China opening, and I don't know. I don't really have much of an opinion on it. I wouldn't trade it here one way or the other. But if it breaks down, below this recent lower high, say below 74.95, below $75, I think you could short it there. But I don't trade crude, so I won't.
Yeah. And for me, where it is now, and I don't know the fundamentals all too well, but just looking at this chart, it's just down an area where now it's very hard to trade. It's one thing when it's up here or maybe when it's down here and trending, but now it's just kind of a tough trade. So no real reason to get involved there. But, if we talk about beautiful trades, 10-year yield, you were showing this the other day, I think, or the 2-year without any context, just asking, what company is this? Name that chart type game. And whether it's bullish, and this thing looks really bullish. So I'd love to buy it here, but I don't like the idea that that means I'm banking on rising rates. That's not something I want in this economy or
Yeah,
for
this
the
is a hard,
stock
well, it's a
market.
hard thing to buy the rate itself. So
Yeah.
this is a chart of a rate, right? So you can't buy the rate. What you can do is short this bond.
Hmm.
You could short the 10-year bonds. That's how you would express a bullish opinion on this chart, essentially. And I wouldn't do that either. I just think this is the most important price in the market, um, in the global market. So depending on how high the 10-year goes, a lot of other things are based off of that. And it's pulled back quite a bit from its highs, in late October. And now we're kind of holding a little bit of support here. And so who knows where it goes? Nobody knows, but got to get back above the 50-day. And then it's got some more work to do to break out and make a new high. So there's a lot left there. If it's going to go higher, stocks are going to go lower. And if it doesn't go higher, maybe stocks will find a bottom here soon. So
Hmm.
I just think it's we haven't looked at this chart in a while. We've been kind of doing some shorter versions of this call for the month of December because we've been busy and we're still busy. But I just thought it was worth maybe throwing back on because it kind of looks like it's found at least a short-term bottom and it's starting to climb its way back higher. And today it's basically just flat. Hasn't really moved since we took the screenshot.
Yeah. And bonds don't always move as fast, and can take some time. But here's that 2-year chart we were talking about. And this is one you're just forming this beautiful wedge right here. And I I think right now, I mean, I like to wait for it to, break that line and then I'll call my direction, but it's a long-term trend going higher. Wouldn't be surprised to see it continue.
Yeah, I think that thing breaks out, whether it's, today or tomorrow, or if it drops all the way to 3.998 first. I think it's going higher. But if you go back one slide. So the 10-year rate's currently 3.679. If we go forward, the 2-year rate's 4.240. So again, that's sign of a negative yield curve. The 2-year rate's higher than the 10-year rate. I talked about this a bunch in my market commentary. So if you haven't read that, I encourage you to go out to our website, click market commentary, read through that. But I think the 2-year yield is more likely to make a new high than the 10-year yield in the short term. And so that would mean that that the yield curve stays inverted and the 10s minus 2 spread stays negative, and that implies a recession on the horizon. So none of that's good for the economy or overall global markets. And we'll see. We'll keep an eye on it. But the 2-year has just been charging higher, and I think that's probably likely to continue, at least for right now, while the Fed's hiking rates. As they hike, the shorter end of the curve is going to be supported. So again, you can't buy this rate. right? If you wanna be long this chart, you gotta go short bonds. You
Yep.
gotta go short the 2-year treasury, and you can do that. There's funds that do that. There's put options on funds that track it. My experience though, it's pretty hard to make any real money trading those things. Kind of
Yeah.
not worth it.
You can do the futures contract too, but again, kind of like what you're saying, it's hard to trade these and make money. I've been at it
Yeah.
for a long time. I've worked in fixed income. Still, for me, is challenging. Just not as nice of a chart as you might get in the equities.
Yeah, I really just use them as like a conviction thing, like for all
Hmm.
my other trading. So, I try not to fight those tapes.
Agreed. So, and then that is kind of help that dollar rise higher. That's what we're looking at here. And Shane, I'll let you talk to this chart.
Well, I thought we'd put it in. We haven't looked at the dollar in a while, but last time we were looking at the dollar, it was making a series of lower highs and lower lows in that wedge. And we kind of said the run in the dollar's over is probably going to drop to the 200-day moving average. And since the last time we looked at it, that's exactly what happened. It dropped, bottom dropped right out. It went to the 200-day, bounced a little bit, and now it's still in a downtrend. Making a new set of lower highs and a new set of lower lows and trading below its 200-day moving average. It has found support here around 103, which is, we'll see if that holds and if we can get a breakout going from here. But a lower dollar actually, it's interesting. I mean, a lower dollar should make the market go up. And yeah, the market has rallied, right? But it was just another bear market rally, it seems like. And so it hasn't rallied as much as you would expect with a pullback of this magnitude in the dollar. So we'll see what happens with other foreign currencies that make up this dollar basket. But as the European Central Bank hikes rates and others like Japan hikes rates, which I know you have a slide on later,
Hmm.
that kind of activity would force the dollar to go lower, which again is good for U.S. stocks. So we'll see if that can put some wind in the sails of stocks and maybe help us find a bottom. But I have my doubts, and I think that the dollar can, how long it will take and what needs to happen economically for it to come to pass, who knows? But I think the dollar can easily rise again and go back to that 114 level, but it's going to take some time.
Yep. And then here's our update. We used to share this a lot more, but just going back to that 60-40 portfolio, down 20%, not doing a lot of people any good.
Nope.
This idea that, the bonds are going to zig when they zag. Really, it's more about, with retirement planning, you can use bonds to get some income and look at it from that side. But if you're looking at it to balance out a portfolio, I think that it had its period. And it's not, we're coming to the end of that one, or we are at the
Oh
end.
yeah, we ended that. I mean, these are supposed to be non-correlated assets. The orange line is supposed to go up when the blue line goes down, and vice versa. But you don't see that happening. Over the course of this year, they go down together and they go up together. Yeah, there's a couple days here and there where they might go opposite one another, but by and large, these two lines, the orange and the blue line, are moving with like almost perfect correlation. They're both up at the same time. They're both down at the same time. And that is not what you want if you're trying to build a diversified portfolio. These lines are supposed to move in opposite directions, not
Yep.
together. And this is, I mean, they have peaks right around near the same day. They have valleys right around the same day. It's just it doesn't work anymore. And if your advisor still has you in a 60-40 stock and bond portfolio, I think you can probably plan on more of this for the, I don't know, for a while, at least as long as the Fed's raising interest rates. So
Hmm.
who knows how long that'll be, but yeah, this is not the kind of portfolio that worked very well in 2022, and I don't know how likely that is to change in the near term.
Right. And just for an update, Shane, we have now officially broken 3,800 on the, ES futures and
Ooh.
hit new lows for the day. So
Oh, that's ugly, man.
the day is not over.
Is Tesla down 10% yet? Oh yeah, it's down 10.3% now. Whew.
Yeah,
Jeez. For today. That's today. That's not like this week or this month.
it's
Today.
it's
That's today.
Thursday and we still have catalyst for tomorrow. So, man, uh, run for cover.
Holy moly. The dude, Elon has to be selling Tesla today. It's traded 142% of its average 50-day volume, and we have 3 hours of trading left in the day.
Yeah.
It's gonna make an all-time high volume today, man. I mean, it's really close already in the day. We still have 3 hours left. He's got to be selling more shares today.
Yeah.
Has to be.
Something's going on, but uh, we'll kind of get through this here. But right now, back to just what mortgages are still at rates that are not good. And Shane, I was telling you, I mean, I've got a house that's maybe just a touch above what the neighborhood is at price wise. That's been on the market now for 4 months. Real estate has slowed down a lot, and this is why. And people, you got a recession coming, or a high prospect of it. People are going, hey, let's pause on purchases and sit back and see.
Yeah. Yeah, the mortgage rates are high. They've pulled back from their peak, which is good for some people. But unfortunately, what that does, that pullback supports home prices, which supports inflation being higher, which
Hmm.
supports the Fed continuing to raise rates. All of this is bad for stocks, as we are seeing play out today, and the past several days. As much as people don't want to see the mortgage rate go higher, they don't want to see house prices go higher either. So you're just in a bad spot.
Yeah.
It's a bad spot.
And this one, Shane, you found this, but 41% expect the economy to weaken next year. So this is what they call consumer sentiment. And if people are optimistic, they'll go buy things, they'll put money in the economy. And when you get numbers like this, they're starting to, they don't feel so good, and they're going to slow down on spending.
Hey, you should send Ken an invite to this call, see if we can get him on for the last part. He just said something funny in Slack. I want to see if I could I'm gonna tell him we're gonna send him an invite, see if he can jump on. I don't know if he's busy or what.
Let me see if,
Uh because he just talked about Santa right as we were about to talk about this, and where this comes from. Um This comes from the Deloitte study. I was actually looking because I've seen some headlines recently about how many people are just like not doing Christmas this year, like don't want to exchange gifts because they don't want to have to go buy them, and don't have any money to buy them, all that kind of thing. So I
mhm.
was looking for some support for that, like some data for that, and Deloitte usually produces a study like that. Last year, in 2021, the number actually was like its highest ever, like 11.5% of people weren't going to do Christmas last year. So I couldn't find anything in their studies that updated it for 2022, but I did find this. So if last year was the worst year and 37% of people feel worse this year than they did last year, and 41% of people expect the economy to weaken next year, I think it's probably pretty accurate that maybe more than 11.5% of people are just skipping Christmas presents this year,
Yeah.
which is I mean, it is what it is. I don't think anybody has to like celebrate Christmas and jolly old Saint Nick in a red coat coming down your chimney and putting presents under a tree. That's really not what it ought to be about, in my opinion, anyway. Um, that's neither here nor there. But people aren't really feeling very good about their balance sheet and their income, the wealth effect, their value of the stocks in their portfolio, the value of their home is coming down a little bit. I mean, just getting hit from all angles thanks to the Federal Reserve manipulating the price of money for years and years and years, and printing more money than they needed to, giving it away to people who didn't earn it, because the government, wanted to shut down the global economy. It's just, problems like compounding and compounding on top of each other. And what they ought to do, they being the government, should just leave it alone and let the business cycle, the capitalist business cycle, unfold. I mean, there are contractions and there are expansions, and the market knows better than human beings about what interest rates ought to be.
Yeah.
Nobody needs to set interest rates. What you need to do is leave them alone. That's it.
It's funny. Um, I was out doing a little Christmas shopping and trying to replace a necklace that my wife had lost that I bought little over 2 years ago. And I went and I found almost the identical one, and it cost double. It's like, I mean, you think about how
Wow.
that's spilling over to Christmas shopping right
That's
now.
crazy, man. Yeah.
That I didn't purchase it.
Hmm. Well, good for you. I mean, have a little resolve. Don't just chase. I don't know
Yeah.
that it'll ever be any cheaper, but it probably doesn't feel good to pay that.
No.
Ken
So
coming?
I am messaging him right now.
Oh, you didn't send him I just sent him an invite.
I did, and then he was being skeptical of it and asking what it's for. So I told him we'll see if we get him on here for the end.
Bring him on, sissy boy. All right, next
But
slide. What do we got?
so this one, I only brought this up for one thing, and that's Bank of Japan had a very easy money policy that kind of bit them in the butt. They've not had any inflation forever, and just no rates or no interest on their bonds. And now they increased the band they're going to let their 10-year go up to, and that's only significant for the idea that all the central banks out there are trying to fight inflation, and now Japan has joined the cause. This is not the backdrop to go buy stocks. So if you're looking for that Fed pivot, that's not happening. So
See,
sorry
I'll
to
take
tell
the
you
other
that.
side of that though. Like, I mean, just honestly, I think the market, had a little reaction to this like overnight one night when Japan finally did it. But I don't know. I haven't like looked or studied, but this is the only time in my whole lifetime that I can remember Japan raising interest rates. Maybe they've done it before. I don't know, but I don't remember it if so. The only thing this really does though in my mind is helps keep a lid on that dollar index. And the lower the dollar index goes, the higher the US stock market can go. So I think from that perspective, it actually helps US stocks. I don't know. I don't know. To me, it's like a headline. I don't know how much it really matters in the overall grand scheme of things, but I do think it's interesting. Even if not impactful, it's interesting that the what's his name? Kuroda? Is that his name over there? I don't know who he
Forget who it is.
is.
It was, the name I always knew was it Shanzei Abe or Abe not?
Yeah, but he got assassinated or something. I don't know.
Yeah, he's
He
not.
was the president. No, the Kuroda, I think, is the guy who's in charge of interest rates. I don't know if he's like their central banker or what, but he's never been into raising rates. He was always like, we need inflation. We got to cause inflation. We need stuff to cost more. Hey, there's
Yeah,
Ken. He's coming. He's coming. Um, connect. Hey, there's
there he
Armstrong.
is.
What's up, Ken? Oh, can he hear us? Anyway, I don't know who the guy. Hold on, let me Google it while we're waiting for Ken.
There he is.
Japan Kuroda. Who is Kuroda? Bank of Japan governor. Yeah. So he's like their central banker. Ken, has the Bank of Japan ever raised interest rates in my lifetime? Is this the first time they've done it? Do you know? Oh, we can't hear you.
Oh no.
Technical difficulties.
There we go.
There he
There he
is.
Got to
is.
turn the headset on and make it work.
Hey. Did you hear my question?
I didn't know.
Has the Bank of Japan ever raised interest rates in my lifetime? Do you know? Has that ever happened?
Are you 39?
Yeah.
If they did, it was when you were running around really excited about Christmas because you
Still
were only
pooping
like
my
5.
pants or something. Yeah.
Yeah,
That's
something
cool.
like that.
Hopefully I wasn't still pooping my pants at 5, but anyway, so Ken said earlier in our Slack chat, he said the Grinch has kidnapped Santa and stuffed him in the back of his cave, bound and gagged. And I was like, gosh, we got to get Ken on the call. So, nice little Christmas treat for our viewers. Ken's been on a call with Kyle before when I was out of the office that one week. But anyway, Ken, we're just wrapping up the Elevate chat. So we got like 1 or 2 more slides to go. Feel free to chime in if you got anything to add.
All right, yeah, we'll do.
And I thought
see what you're doing. Go ahead.
I'd follow on with that joke that Ken brought in, but this is it right here. So tomorrow is Friday, and it is the last trading day before Christmas. So will we get that Santa Claus rally? The market's getting crushed right now, and this is all the data coming out on a Friday before Christmas with light trading volume. I mean, this could get really ugly. So
yeah, so we got consumer spending, and then we got prices. Those are both likely to move the markets, and you don't have like the actual portfolio manager sitting at his desk because most of the actual portfolio managers are taking the week off to lick their wounds after a down year. They want to figure out how to sell you the idea of charging you some management fees to lose your money. And they don't want to work hard anymore. So they're out celebrating. And they've got their juniors on the desks to react to this data coming out tomorrow. Hopefully it's not too wild. Hopefully we're pricing that all in today. But you never know, man. Those light volume days can really move from a percentage change standpoint. So we'll see what happens tomorrow. We'll be here. We'll be on the desk. We'll be watching.
We
Well,
will.
For any of you who have lived in New York, as I have, those portfolio managers are all out sipping martinis in the Hamptons.
Yep.
Yeah,
Yep.
they're not at their desks, and you know, looking at a couple of charts like the Nasdaq, and Nasdaq is getting
Go back to Qs, Kyle.
relatively close to its October lows. October lows were around 10 on a closing basis, around 10,677, it looks like.
You should see the
And
Qs on your Zoom screen, by the way. This is our chart that we've been looking at for our viewers.
yeah,
Can you see
yeah,
that, Ken?
okay. Yeah, so you could see we're not too far away. I think we're absolutely going to test those, and it may happen tomorrow.
Yeah.
Where are we at
Yeah.
right now on the Qs? I haven't looked. We're at 263. So
Yeah, and the
it's
S&P
dropped a little bit since I took the screenshot, but at 254 it looks like 254.26 is the low for Qs intraday.
Yeah, and the S&P's down 2.7% right now. So
Getting rocked.
So to get to that Qs low, we're only talking about 3.18% lower. Qs has
Yeah.
been down more than 3.18% more than once this year, so that's easily doable tomorrow.
Yeah,
It is.
S&P's got a lot further to go, but I think same thing. It won't be. I don't. Hopefully not all in one day, but I do
Yeah.
think it'll test those October lows before it decides where it's going next.
Yeah, S&P's got what, 7% to get to the all-time or to the lows for the year. So, yep, I think it's likely, man. I really do. But I've thought that the whole time, even when the market was going up 17, 18% over the past few weeks. I was like, yep, new lows are coming. New lows are coming. Everybody's probably looking at me like I'm crazy. Got 8 heads, but here we are again with those fresh lows not out of the question at all.
no.
Yeah,
So
it sure looks like Wall Street's going to have to reprice earnings, and as a result of that, prices are going to have to come down.
Yep,
that's what
Yep.
I think.
So
But they're late to the party. They're still predicting like 7% growth next year.
yeah,
So
those numbers got to come down.
when those numbers get adjusted, I think we may see a bit more on the elevator ride down.
Yeah, and as they get adjusted, the PEs are going to go up, right? Because the E is going to go lower, and that's going to force prices to. So things that look like they're cheap right now, is every bull's famous thing to say is like I'm looking at this and I'm saying, oh gosh, it's going lower, and then the objection will be, well, it's cheap. I mean, it's maybe if you don't know, if you think you know what earnings are going to be based on last year, right? And they're just now reporting reality from like 3 months ago. What's it going to be 3 months from now? What's it going to be 6 months from now? And if we're in the middle of a deep and ugly and nasty recession with rising unemployment, like what's the E really going to be? And as they force that E lower, the ratio goes up, and it something you thought, I mean, like I thought Facebook was super cheap, 6 months ago, 8 months ago, and it's crashed like 50% since then. So it's just cheaper now.
Yeah, you probably said it a number of times on this chat, but things that are cheap can always get cheaper.
Yeah, they can always get cheaper. Yeah,
Mhm.
and we've just watched it all year. So if you don't have a model for the stock, if you don't have a model for GDP, if you don't have a model for what the Fed's going to do and how they're going to hike rates and how that's going to impact the sales and revenue and all the things, like you're flying blind and you don't have any idea what this company's going to earn. If you're just looking in the rearview mirror saying, well, over the past 3 years, earnings has grown by 22%. That's likely to continue next year, and you're wrong. I mean, that's just not the right way to do it. I mean, that's a interesting way to look and screen for things that you might want to look deeper into. But just because something grew 20% since COVID lows, you might want to throw that out and like normalize it and say, well, gosh, how's that likely to grow with the Fed hiking and us going into a recession? That probably changes things, and it would change your model and your pricing. So anyway, we should probably wrap this up. Ken, thanks for jumping on and joining us. Kyle, you want to go to the final slide real quick so we can get our Babylon Bee funnies in?
Yep. And we have
Oh.
it up there. Needs no explanation. And
Mm.
yeah, Ken, thanks for joining us today. Great to have you on. And yeah, Merry Christmas to everyone.
Yeah, Merry
Yeah, you-
Christmas. Don't forget,
You as well.
don't forget about why we actually celebrate Christmas though. It's not about the gifts under a tree, it's about the gift of your salvation that's available to all of you out there. So if you don't know about the gift of salvation offered by Jesus, I encourage you to figure it out and ask some questions. Feel free to shoot me an email or any of the guys on this call. Happy to chat with you about it anytime. So remember what it's all about, and it's about your salvation.
Thanks for throwing
You
that in,
bet.
Shane. Couldn't agree
Yeah,
more.
thank you, Shane. So
All right, guys. Merry Christmas.
Merry Christmas. Have a good one.
Merry
Later.
Christmas. Peace out.